Hey guys, Jason Schnitzer here with O.C Realtor Talk, and what I've got for you today is a question that I got actually from one of my good friends recently, and it's, why does my payment seem to go up every year? And it's a good question because when I first bought a house, it kind of caught me by surprise too. It just seems like, at least once a year I was getting a bill in the mail from my mortgage servicer saying that I have an escrow shortage and I need to make a payment. Usually it's between $100 and $200-ish to make up the difference, or my payment could be raised on a monthly basis to be sure that my escrow or impound account had enough money in it, so when it came time to pay taxes, interest, and all that good stuff, there was enough money in there. Now, if you guys own property, you're familiar with what impound accounts are and escrow accounts are. Basically, when you get a loan and you make that one payment, it goes to a few different things here. So the majority of your payment goes to principal and interest, actually paying down the loan balance and paying back the money that you borrowed initially. Another good portion of it goes to your taxes for, city, county, state, and then lastly, insurance. Now, although 99.9% of people are going to be getting a fixed rate interest rate on their loan, every year your county is going to reassess your property to the degree in which they can. And what I mean by that is, as long as there's a positive year in real estate, in other words, we've got appreciation, your property values are going up, the county is going to take every chance they get to raise your property taxes. And they can do that by a maximum of 2% every year. Now, in Orange County, at $600,000 purchase price, your property taxes are going to be about 1.25% annually. So that's $7,500 a year. So at 2%, as you can see here, they're going to be asking for an extra $150 a year. So that $7,500, it's going to go to $7,650. And year on and year out, they're going to ask for that 2%, unless, of course, we're in a recession and property values are either staying stagnant or have gone down. Like back in the 2007, 8, 9, 10 era, people's property taxes actually went down, so their payment got lower. But as you can see, if they're taking an extra $150 annually, if your servicer of your loan will need to make up the difference. So again, you can typically do that by a one-time installment, which is what I recommend my clients doing. It's what I do personally with my properties, just because I like to keep my payments the same as opposed to paying a little bit more. And like I said, usually it's anywhere from $100 to maybe a little over $200 a month. So again, just to keep the status quo, I always recommend just writing them a check, keeping your payment the same, and everything keeps on going on hunky-dory. So again, if you are ever confused as to why your payment goes up every year, hopefully this explained it for you guys. So if any of your friends or family might benefit from this, of course, share it with them. We love to arm people with information, and that way when they go to make the next decision on real estate, buying, selling, or otherwise investing, they're armed with information. So hope this was helpful. Thanks for watching, guys. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below.